Silver has more in common in 2024 with copper. There's an investment demand like there is for gold, but silver, by far and away, more use comes from, it's an electrical component, right? It's a conductor of electricity, that kind of thing. Green metal. So silver's got more in common with copper. If copper just continues to go through the roof at this point, silver's going to play along. Okay. And that's this whole spread between Shanghai and COMEX is going to continue to widen, and it's going to force the price higher. And so I tell everybody all this just so that as further argument that even though price for silver is at 11-year highs, it's probably going higher.
The anticipation of U.S. interest rate cuts has dampened the demand for gold and silver, causing a significant drop in prices for the precious metals. The market now fully expects a 25 basis point rate cut in December, though the possibility remains for one in November. Recent strong economic data also provides the Federal Reserve with enough wiggle room to maintain higher rates as it continues to combat persistent inflation. Silver has outperformed gold in the past month, with the silver-gold spread returning to levels not seen since mid-November 2021. If silver breaks and holds above the mid-October 2021 high, experts expect even higher prices for the metal in the coming weeks. Craig Hemke, a resource stock analyst with over 15 years of experience in the sector, believes recent trends in the copper space hold lots of crucial information about what's coming for silver prices. Copper recently surged to a new record high, extending a months-long rally driven by financial investors betting on supply shortages. Futures on the London Metal Exchange soared by up to 4.1%, reaching $11,104.50 per ton, and breaking the previous record set in March 2022. The global copper market is in significant turmoil, exacerbated by a major squeeze in the New York market, where prices reached an all-time high last week. During a recent interview with Liberty and Finance, Craig revealed that copper prices are evidence that COMEX and LBMA are losing their roles as price makers for the global precious metals market, primarily due to the massive supply shortages of metals like copper and silver. Craig predicts that as copper prices scream higher in 2024, silver prices will follow, shattering all previous expectations for the metal erroneously described as the poor man's gold. We will present clips from Craig's interview. But before we do, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thank you, and enjoy the video.
The four heads of different bullion banks, these trading desks, JP Morgan and HSBC, and I can't remember what the other two were, all ran over to Shanghai back from a period of late March into early April. I mean, there's Reuters stories on all four of them. Some of them use the same picture. And that they're just caught in a jam now in silver. We get reported through the CFTC their gross positions, and you can compute the net positions every week with the commitment of traders reports. So we know from that data as a group how much net short they are, not even including the producers that are allegedly hedging or selling forward, just what are called the banks, the swap dealing banks. They're currently net short about 40,000 contracts. What, 5,000 ounces a contract? That's $200 million. And you're like, well, wait a second. Every dollar that the price goes up, then that's $200 million in losses. So you think, okay, well, they've got an incentive to keep price in check. But the problem, if they keep their price, the New York price in check, and the Shanghai price keeps going like this, well, now that an arbitrage opportunity develops, silver that is backing the exchanges, and all their derivatives and the leverage there, all of a sudden they risk losing some of that. So it's like, okay, we can either keep the price low to keep our paper short position from, accumulating a couple $1 billion in losses, or we could risk kind of an existential event and have our vaults get drained. And so that's what I mean, kind of a rock and a hard place. Now, one last thing though on that. To you and me, it sounds simple, right? It's like, hey, look, Shanghai last night was trading $36 an ounce. And in the U.S., it's $32. So a simple arbitrage is you buy in the U.S. and you sell in Shanghai. U.S. price goes up from the buying. The Shanghai price goes down from the selling. And, and you close that gap. Well, is $4 enough to make that profitable? Is $4 enough to take the risk? And that's something that when I hear people or read people talking about this potential arbitrage, I think gets left out, because to execute that trade and to close that gap, you have to buy in the West and sell in Shanghai. Okay, well, if you're buying in the West for future delivery in Shanghai, you better be darn sure you can actually get your hands on that metal, much less ship it over there and do everything else, and customs and everything else you got to do to get the metal into China itself. Because otherwise, the other end of this thing is short. So do you want to be, if the COMEX or a bank in New York says, we'll get you this in 90 days, do you want to be left hanging out here short in Shanghai? It's like getting sideways with some of the guys, walking down the street in Newark. I'm thinking about, like a Sopranos episode or something here. I don't want to get sideways with Shanghai at all on this deal. So there's a risk to putting on that ARB, just because I don't think anybody could ever feel comfortable in size, a couple thousand contracts worth, 10 million ounces or something in size, enough to make that ARB worthwhile. And so it just continues to widen and keep going this way. Again, it's a very interesting situation we're in, and not one that many of us really anticipated as the year began.
The heads of 4 bullion banks going down to Shanghai for undisclosed reasons shortly before silver prices hit 13-year highs certainly leaves a lot of room for speculation. Over the past few years, as industrial uses for silver increased, exchanges have been experiencing rapid drawdowns in inventories. Across the world, Shanghai has been deeply inserting itself into the metals sector by loading up on tons of metals, especially gold. So, as power is leaving the West and moving to the East, the Shanghai Gold Exchange is taking over from COMEX and LBMA. But before the final transition occurs, every aspect of metals market manipulation will be exposed to the public, and the futures market will be exposed as the fraudulent scheme it is. Craig and other experts believe this moment, the moment the physical market finally takes control over the paper markets, is going to happen much sooner than we all expect. Let's get back to the interview.
Copper's a very interesting story because, again, it trades in London, where is the actual physically delivered market, but then you got these derivatives that trade in New York. Well, that sounds kind of familiar, doesn't it? Okay, I have always felt, I can't say this is true, this is my 15 years of watching this stuff. The daily, maybe not every day, but the price of gold and silver is managed to physical delivery. And what I mean by, let me ask you, you remember the guy Michael Nowak of JP Morgan, who's now currently in federal prison for manipulating? All right, he was the head of the JP Morgan precious metals desk back until whatever it was, 2018. He was also on the board of the LBMA, London Bullion Marketing Association. He's now in jail, actual federal prison. His role in managing and manipulating the precious metals prices through the JP Morgan desk. All right, so that's kind of think of that as the derivative desk in New York managing the price for the physical desk in London. So London knows where the orders are for physical delivery, and they'll say, they'll alert their trader, the JP Morgan traders in London know this, and so they alert the JP Morgan. I'm just picking JP Morgan as, an easy example. Say, we need price, don't take any lower than this because that's going to hit some orders and physical orders to fill, and we don't have the metal to flow at this level at this point. So therefore, we don't want price going below a certain level today, that sort of thing, or above a certain level, whatever. If that's the case, again, what I'm implying here is a lot of the physical delivery is kind of just in time. It's not like there's this big stockpile of physical metal and they're like, hey, we just got an order for 2 metric tons. So put it on a truck and drive it. You know what I mean? But there are demands for physical metal. We've seen, the global central bank demand, that sort of thing. All right, anyway, long answer. This is how copper works too. Okay? At least in my impression. So why is all of a sudden copper going crazy? Well, there seems to be a supply issue. You can see it in London where we hit 11 new all-time highs, $11,000 a ton about a week ago. Okay? And on 2,200 pounds in a metric ton. So the COMEX price got to $515 or something like that. New all-time highs. What's going on here? Two things have happened in the last 6 weeks. Now, there's a point to all this, I promise. Back in the middle of April, the U.S. and the U.K., hey, sanctioned Russia again. Where have you heard that story before? And said COMEX and the LME would no longer accept Russian copper for delivery as a delivery of metal source. Aluminum, tin, a couple others too, but copper. The other thing was, if you go back, the largest copper mine in the world is in Panama. It's a big, mainly open pit thing called Cobre Panama. And it produces 1.5% of the world's copper supply. And the new Panamanian government was frustrated by the deal the previous Panamanian government had signed with First Quantum to operate that mine. And so they shut it down. 350,000 metric tons of copper a year taken offline. So all of a sudden, is there no copper? Is that what's going on with price? And so ultimately, why am I telling you this whole story? Because frankly, even though we all invest in silver, silver has more in common in 2024 with copper. There's an investment demand like there is for gold, but silver, by far and away, more use comes from, it's an electrical component, right? It's a conductor of electricity, that kind of thing, green metal. So silver's got more in common with copper. If copper just continues to go through the roof at this point for all these reasons that I've talked about for the last 27 minutes or so, silver's going to play along.
Like Craig, renowned stockbroker and gold bug, Peter Schiff is expecting higher silver prices. A few days ago, he put out a tweet predicting much higher prices for the white metal. Today, the SLV Silver ETF had its highest close since January 2013, Peter stated in a May 28th post. Today, gold closed above $2,360. Gold rose 40%, while silver stayed flat. Closing this performance gap, with gold staying unchanged, puts silver above $45. In another more recent post on Twitter, Schiff added, "Even with gold down $18, silver is still up 17 cents. Something is definitely going on with silver, as it is likely poised for an explosive move up. There is no way this move will happen without gold going along for the ride. The shorts are in real trouble. No sympathy from me." All evidence points towards higher prices for gold and silver, with silver outperforming significantly. Please share your comments and opinions in the comments section below. Also, ensure you smash the like button, subscribe to the channel, and turn on the notifications bell for more videos like this. Thanks for watching.